Hi guys, welcome to another video by Optionables. My name is Ayush and I am a trader. In this video, we'll discuss about tomorrow's expiry and we'll also discuss which are the key levels for Bank Nifty and Nifty to look for the month-end expiry. So first ever, whenever month-end expiry is there, month-end expiry is full of volatility. It might happen that 1 rupee call might go to 30 rupee and the same then put side also 1 rupee can go to 30 rupee. So one thing is very clear, don't even trade without a stop loss, or if you don't prefer trading without a stop loss, please hedge and trade. So coming back to the levels which we are watching, if we have to analyze a particular day or a particular week, it is always good to see the week from the starting, that is Friday. So from Friday we can see one thing which is very clear, that market opened higher and from that day we saw two trendy days downside, Monday and then Tuesday also. So lastly what happened today was interesting. Market opened, gap down and headed lower. Like Bank Nifty broke 44,400 and there was a clear cut down move till 44,300 or 44,250. But then it got rejected and there was a clear cut sharp bounce. So one thing is very clear, that the index might be bottoming out for short term, which will get cleared if we break above 45,000. So for tomorrow's expiry, the key levels which I am looking at is 44,400 on the downside and 45,000 on the upside. Until and unless 45,000 is taken out on the upside, don't want to go aggressively bullish, because it might happen that this might be just a pullback and then the continuation happen on the downside. Coming back to Nifty also has a trendy week where it had lower and lower, but what happened today, same thing happened. Like 19,550 was initially broken, but as soon as that level was broken, there was no down move and there was sharp reversal. So in the morning, like first 2 hours, what happened, everybody would have shifted their calls aggressively down, and when the short covering came, it might be a result of because of they would have rolled up or they would have squared off. But one thing is very clear, that even though there is a slight change in the direction, we should not go very aggressively bullish. The trades which we have carried for tomorrow's expiry are range bound, because in case there is an overnight decay, we might end up making 0.2 to 0.3%. But in case of let's say 0.5% or 0.6% also, either side will not be losing too much, because at the end of the day it is an expiry. And whenever we are not sure, taking a range bound trade can be a helpful decision, because ultimately if you take a biased trade, let's say higher premium put and lower premium call, and the market heads lower, then your puts will jump like anything and your calls won't be enough to compensate for that. So that was one thing, that whenever you're not sure for overnight, either don't take a trade. But if you are somebody who has a system where you have to take a trade and your overnight risk is limited to 2% or 3%, whenever you are in confusion, please carry a range bound trade. So that was our analysis for the coming expiry. So if you like this video, like, share and subscribe to the channel. Thank you.